Is the market overvalued, or is now the time to buy the dip? In this video, I'm going to provide clarity and a strategy to protect the profits that you have right now, as well as reduce risk and maximize profits going forward. I'll provide the latest market updates and, most importantly, actionable steps to reduce that risk and provide max profit moving forward. So I'm going to touch on 2 live trades on the option trading platform, and these are the best strategies that I'm using, as well as the 2 best stocks for this strategy right now. Should be a fun video for you here today. One thing I ask, one thing only, smash that like button down below. It really helps to get the video out to more people, and it helps the algorithm, so I really appreciate it. Thank you very much. You're certainly welcome to subscribe as well. We're at an all-time high for subscribers, so thanks for that as well. And with that, let's jump into it. Today, the market is trading at elevated levels compared to historical averages. The overall price-to-earnings ratio for the S&P 500 is hovering around 26, which is way above the rolling 10-year average of about 19, signaling a more expensive market. When looking at the cap-to-GDP, this is often called the Buffett indicator. The ratio is 2.13, so it's well above the historical norm, suggesting the market is overvalued relative to the size of the economy. Comparing these metrics to past market cycles, such as the late 90s dot-com bubble or the 2007 pre-crisis peak, we see some similarities in valuation extremes which historically preceded market corrections. So we should probably be pretty careful about having too much invested in the market at this time. The U.S. inflation rate remains steady at around 2.7%, with core inflation, excluding food and energy, rising slightly to about 3.1%. The Fed continues to monitor these inflation trends closely while maintaining a cautious stance on interest rates to balance the economic growth and control inflation. Economic growth forecasts are moderate, with concerns about potential slowdowns tempered by resilient consumer spending. These inflation and economic signals influence market risk appetite by causing investors to weigh the likelihood of Fed rate hikes or pauses, which affects valuations and investor confidence. As inflation shows signs of stability, but still not a sharp decline, markets remain in a cautious phase. So PEs are high and there's overvaluation concerns. However, there's a couple of stocks and trades that I've got coming up here that are ideal and they're not overvalued. So they're going to be safe, I believe, both right now and definitely winners big time in the long term. So Darren, what are the stocks and what's the strategy? Well, here it is. Okay, guys, the first stock we're going to talk about is AMD. I'm on the Tastytrade option trading platform and Brokerage. There's a link down below. It's my favorite, super intuitive for trading options, and there's some benefits if you go through my link. Now, I'm on the trade page. Oh, no, I wasn't. Correction, I'm right here on research and news, and then financials, and then we're going to go to annual, and I'm going to show you right here the income statement. So you can see the revenue and net income each year increasing, and you can go quarterly as well. But I like to look at the annual, the long-term approach as well. The assets versus liabilities, very good balance sheet. So super strong stock as far as fundamentals. Now, if we look at this is Yahoo Finance, and I just punched in AMD, and the stock is trading at 150 or 165 right now. The market's open, so you can see it's moving. But 165, and just in the last month, it was up here at 185. Now, my target for AMD is well over 200. They've got the MI350 out now that hasn't really, it's selling now, but the revenues are going to show up next quarter. And they've got the MI400 coming out next year. So huge growth ahead and revenue for AMD. I'm not concerned at all. It's going to explode, I believe, over the next 6 months and year. But if we look, this is 1 month. If we look at the 1 year, you can see that dip down, which is definitely a buying opportunity. Now, if we go to the analysis page here, we can look. They did come in. It says they missed revenue. Oh, and it was due to the MI 308, the restrictions that we put on China, which have now been lifted. So it's not really like they missed. So to me, that's a buying opportunity. But that did move the stock way down and presented this opportunity. If you look at that earnings per share trend, look at this, 2025, 2026, almost doubling. Crazy. And the growth estimates, 18% this year, 53% next year. So great stock, AMD. And let's go back to Tasty Trade, and we're going to go to the trade page. One of my favorite strategies, and definitely in this market, with the market down, you've got protection. I'm going to show you why, is I'm going to go out to the September. So we're on the trade page now and table mode. Trade page, table mode. We're going to open up the September. We're going to go out over a year, so 393 days to expiration, and open up that option chain. This is called the poor man's covered call. So we're going to buy a leaps, and you can see I've got several on already right now. But I'm going to buy the 160 leaps. We've got calls on the left, puts on the right. So we're going to buy the call at the money. Delta is 62. I like to go 62, 65, but this is the one I like right now. A little bit more aggressive, 160 while it's trading at 165. So it is in the money. And we go right here to the mid price. It's $36. So that's really, one option contract controls 100 shares of stock. So that's $3,600. But if you were to buy 100 shares of stock outright, it's $164 times 100 shares is $16,463. So way more than we're paying for this. And the beauty, if the stock does move down, you don't lose nearly as much, but you get more than the profits on the way up. So to me, poor man's covered calls are a no-brainer. And this is a leaps by itself. Now, if you look at the curve mode and the analysis, this is what I like about the Tasty Trade platform. It moves up just like owning. This is the profit zone. It moves up just like owning the stock outright. So it's going to be at 250, I think, within a year. That gives you an $8,000, $8,167 P&L at expiration on that leap. So I love these trades. But what we're going to do now is sell the short call against it in the short term. So we're buying the long term out a year, and then we're going to sell a short-term call against it and collect monthly premium. I like to go around 30 to 45 days to expiration. I actually like the October. I've already got some on in September. So I'm going to go out 57 days, open up the October option chain, and then I'm going to sell. So we're going to sell, and we're going to go out of the money. The 180, this is a 33 delta. So that gives you basically a 67. So it's 1 minus 33, 67% probability of profit. So those are pretty good odds in my eyes. But 575 is what you collect. So that's $575 because one contract controls 100 shares. So you multiply it times 100. Now, when we click on that, it's going to bring down the cost of this contract by that 575. So boom, now we're at $3,000 for putting on this poor man's covered call, and $3,020 for doing this. And we can collect this $500 monthly income every month. We just do this every month. As the stock price moves up, we make money when it moves up on the leaps, and then as long as it stays below this 180 stock price, and we've got $15, $16 for it to move up, and we still keep that full $575. If it does move up and breaches it, then I just roll up, and if it's inside 15 to 20 days, then I'll roll up and out, and I can show that in another video. Let me know, comment down below if you want me to show how that's done. But we can collect $500 a month, and what I like about this is within 6 months, 500 times 6, that covers your $3,000 that it costs to put this trade on. So you're basically controlling 100 shares of stock for free in 6 months. That's kind of the way I look at it. So we hit review and send and place the trade. Okay, guys, I'm going to move a little faster on this one. This is Marvell, ticker MRVL. We're on that same page looking at right here, and we're looking at the financials, annual, the revenue versus net income on the income statement. Extremely good. Balance sheet, assets versus liabilities, very strong. And you can even go to the next page and you can look at the gross margins, 43%, which is good. Now let's go to looking at Yahoo Finance. It's trading at $71 right now. And you can look right here, back just in January, it was trading at $124, so almost double the price. I like when within the last year, it's got this much room to move. This is what I really like about Marvell right now. And look at the PEG ratio under 2 and the forward PE 25 compared to, it traded at almost double that back in July of last year at 48. So huge value right now. And if we scroll down, well, actually, let's look at the right here. We can see the earnings. They beat the last 3 quarters. And then you look at the revenue versus earnings continually every quarter over quarter moving up. And you can look at the earnings trend, huge growth, as well as growth estimates, 78% this year, 27% next year. So huge growth going forward. Now, if we go on the trading platform, we go to the trade page. Again, I'm moving a little faster on this one. We're going to do the same leaps. I'm going to go out 393 days to expiration, open up to September. We're going to buy the 70 at $16.80. So $16.60 is the mid price right here. And then we're going to close that up, and we're going to open up the October option chain, and we're going to go on the left, and I'm going to sell the 80, which is the 35 delta. So we click on the left to sell on the calls, and it's 35 delta, so that gives us 65% probability of profit. So that's the 65% chance that it's going to stay below 80, and it's at 71 right now. So that's more than a 10% move up, and we keep that $3.30, $330 profit, as long as it stays below that in the next 57 days. The good news, I actually want it to go up and move past that, because I'll make more money on the leaps than I will that I lose on the call if it surpasses it. And at that point, I just roll the call up. So you can see what it did was it took that price. So again, let's delete that. Price is $16.60 now. Now when we hit that $3.30, it's going to bring the cost down. So $3.30, $1,322 to control 100 shares of stock. And if we collect 300 every month, this is paid off in 5 months. So yeah, less than 6 months. We hit review and send and place the trade. All right, guys, be sure and download the free options workshop in the link below. Like and subscribe. Let me know in the comments below. Are you placing these trades, or are you doing something different? Be sure and watch this next video.